Hi everyone. Today we saw the SPY pull back from those most recent highs. It sold pre-market, consolidated mid-session, sold into the end of the session, close to that 200. Broke the trend line here. Everything looked pretty bearish on the session. Let's take a look at these medium-term charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Moving over to fear and greed, we stepped down to a 49 from a 51, slight decline there. You can see slight bounce yesterday, slight decline here today. Momentum back to regular greed, strength continues to trend lower, breadth continuing to crater back into extreme fear. After touching that zone in mid-November, put call ratio starting to see a little bit of a bounce there to a 0.63. We've kind of had a consolidation. Haven't seen it stay this low for a long time. You can see it's not even on the charts where you have a 0.61 to 0.62 zone over a couple of weeks, but now we're starting to see that roll up. Volatility rolling up slightly, still neutral though. Safe haven demand still in fear, junk bonds still rolling down, sitting in regular greed. Moving over to seasonality, you can see the low for the month is supposed to be basically tomorrow or the Monday session there at the 16th, and then we're supposed to see bullishness through the rest of the year from there. We'll see how that plays out. It's been a little bit choppy in here. We saw the peak. So we've pulled back from there a little bit. Is it going to continue to roll down? Seasonality says yes, but let's watch the charts. Moving over to the economic calendar, you can see basically in line for CPI yesterday. Forgot to mention that. And then we got PPI today. Core was 0.2, headline 0.4, a little bit higher than expectations. Previous number also revised up, and that did affect markets here today. 30-year bond still sitting at 4.5, which is a little bit lower than the previous read. And then Fed balance sheet actually rose by 1 billion. Interesting to see that change direction for a little bit, but I assume that'll continue to roll off. And then tomorrow, basically nothing on the charts. Moving over to max pain, this actually moved a little bit lower now to 597. Total options up to 1 million. Put call ratio continuing to go lower. Everything there says this should go lower for tomorrow. Call wall still 606. We're still hovering below that after the move today. Expecting that to continue into this kind of 601, 602 area. Makes sense based on this kind of metric. 600 should hold up. But if we see a continuation on the move we're getting right now, 596, 597, with that max pain number being in there, makes sense to me. Seems a little bit dramatic based on where we finished today, but not impossible. Moving over to the charts, this is what I was concerned about yesterday with that double top now that we've seen in this zone of resistance yesterday. Momentum resuming to bearish, RSI resuming to bearish. So we expected the continuation lower today, which is what we ended up getting right to the trend line here. Now, will we see the bounce continuation up to the trend here in the 610 area, or does this break tomorrow and we head down to that 599.86 zone in here? Right now, based on how this looks, you would expect more bearishness in tomorrow's session. Closed right on the low after hours. It did bounce about 10 cents, but nothing crazy. Right at the trend line. It's going to be critical here. The medium term is still bullish, obviously. Everything is still bullish on these trends, but this is a topping pattern for me. Moved into a zone, consolidation, 2 down candles, confirmation candle, retracement, tried to re-break, tried to retest, gap down and fell from that level. So everything says this should be a topping formation. And just look at this price action here, just like we saw on the intro. In the morning video, fell into the morning consolidation, touched the 21 EMA, closed above it there on the 9 o'clock candle, reversed immediately, came back up, retested the 21, sold off directly from there. So that's a key setup. Everything sold off there, broke the trend. 200 on the hourly chart is the critical level. That is at 603.81. Almost touched it after hours. Didn't quite get there. The low of the after hours for right now was 603.91, so we missed it by just a couple of pennies there, but we'll see. Momentum bearish, RSI still bearish. And then looking at that hourly chart, you can see we got back into bearish conditions, took it out here on the 1 o'clock candle, almost got to that lowest ATR band, ATR trailing stops here, all the way up at 607.47. Bands obviously rolling down and tightening a little bit from that lowest area. You can also see some volume coming through at the end of the session. Maybe that says we catch a little bit of a bounce from there. And if this does continue to pull back, you can see we're hitting that 55 EMA on the 4 hour at 604.14. If that breaks, ATR trailing stop at 602.44, which makes sense. I think we're probably going to come in and touch that zone, but the 4 hour chart is still in bullish conditions on the SPY charts, even with the move down that we saw today. So we'll see. Right now, you could argue a little bit of consolidation, but the fact that we moved into the zone and then rejected from there again tells me that this is a little bit of bearish sentiment in my opinion. Then moving over to the NASDAQ, similar thesis, but quite a bit more bearish, 0.65 to the downside. Had the huge up candle yesterday, gap down and fell here today. We're not in the same kind of zone of support that the SPY is because we had that big up candle, took out these previous highs. Now we're retesting that level here. We'll go ahead and add a level there as well, 526.50, right at the high from the 6 December candle, touching that level here. At the end of the session, is it going to break through there? We're catching a small bounce in the after hours, about 50 cents, nothing crazy there, but momentum stepping back to bearish. RSI still looks okay, doesn't look nearly as bad as the SPY charts. You could argue high, lower high here on the RSI, waiting to see if this breaks below the SMA. Volume, not super convincing in either direction, obviously no change to the medium term charts, but definitely a pullback. And usually you have the SPY driving markets, and right now the NASDAQ just seems to be holding up a little bit better. And then looking at that price action here on the short time frame, you can see very similar. Pulled back, retested the zones, sold off into the end of the session, catching a small bounce here in the after hours. Momentum holding up okay. 527, we'll see if it comes back up, hits the trend line here, 528.28, and then rejects off of there. Definitely some levels to watch, definitely some support that is still holding up okay. But either way, the SPY looks a lot worse, and the NASDAQ does look a little better. Then moving over here to the Tasty charts on the 4-hour, you can see we pulled back to that 21 EMA, touched that briefly. That's at 525.64, touched that level in the after hours, and then rallied off of there. Seeing a little bit of a bounce into the after hours, about $1 now on the NASDAQ. Interesting to see that. After hitting the upper band, pull back in time, held the 8 here on a closing basis. But again, just like we saw on the SPY charts here, we took out that ATR trailing stop, putting us into bearish conditions on the hourly chart. This is really what I was playing off of. I'm definitely concerned about that bearish condition flip. You can see we did hold the 55 EMA on the hourly chart. Momentum stepping slightly to bullish, not a huge amount of volume on the session. That after hours candle seems to be gaining a little bit of momentum. Interesting to see that here. Moving over to the Russell and the Dow, these continue to be an absolute dumpster fire. 1.3% and 0.5% here on the Dow, breaking the level 141.43. Right now we're expecting this to push down into this zone here. Maybe there's a level in here that's worth looking at. Maybe 437 makes sense, somewhere in that kind of mid-range. Where you got the candle break continuation here, same doji candle here, continuation makes sense. But for me, this looks very bearish. Again, 6 days in a row, straight down, absolutely not what you want to see. Momentum still very bearish. Volume also ramping a little bit on that sell candle. And then you can see the Russell taking out my level here. Took out the 21, obviously VWAP, everything going. Touched the trend here. We're going to see if that continues to be interesting there tomorrow. After hours, basically flat, selling a little bit. Momentum RSI still super bearish. So the rest of markets still doing bad. Tech still doing the best. Then for individual stocks, I got asked about Super Micro. It's been a little while since we talked about them. Right now, you can see this massive move up off of these levels here. 2050 is the level. Then we hit the trend in here, rejected off of there. A couple of days of selling, super volatile, down 8%, another 5.5%, and then you got a doji candle at support, 37.30. It's holding that level right now, closed above it here today after testing it yesterday. 55 EMA in there as well. This momentum profile is not super great. That has been stepping down for a little bit. If you want to trade off the 37.30 level, that's what I would work off of for now. If it holds that, you can stay bullish. If it breaks down from here, it's probably going at least another 10 or 11% lower to the 21 EMA. And with this momentum profile, it could absolutely go even lower than that. Maybe go back and fill some of these gaps into here, and then you could get a very slightly higher low or a double bottom formation around that 2050 level. But in the short term, it looks like this up move is probably culminated, and I would be patient here. Again, if you wanted to trade off of 37.30, keep a very tight stop. If it closes below that on an hourly candle, I'd be very much out, as this could fall another 11, even 30 to 40% if you do get these gap fills back here. So be careful. Could certainly trade it in either direction. Moving over to Apple and Microsoft. Apple retracing the move from yesterday, closed pretty much at the same level from the Tuesday candle. Again, selling off just a smidgen after hours. Momentum continues to step down, continues to be super overbought after the candle rejection yesterday. And then you got Microsoft hitting our price target at 453.30. Overthrew it pretty substantially, getting pretty close to those all-time highs at 466. But then you can see big wick rejection, big selling after hours. Momentum stepping back down after being overbought. My guess is that this move is culminated and that we're probably going to pull back at least to the 440 level. So we'll see how it plays out. At this point, you do have a higher high, so you would expect a higher low, but that higher low could be pretty decently lower from here. The trend support for me down in the 430, 432 area, and I would be a little bit more bearish than bullish here on Microsoft. Moving over to Tesla, finally getting a little bit of pullback there, and then you got NVIDIA, a little bit more pullback there as well. Tesla down 1.5%, still holding the level 414.50, which was the previous all-time high. Momentum still bullish, RSI pulling back a little bit. And then looking at NVIDIA here, doji candle at the low from yesterday, getting a little bit of a rally here after hours. I wonder if there's some news that I'm not tracking. It's allowing that to rally a little bit after hours here, kind of looking like that's what's driving the NASDAQ a little higher. If that's what's driving it, I'm probably not going to be too worried about the NASDAQ going higher. My guess is this continues to reject off of this 200 SMA. Could argue maybe low, higher low here, breaking out above the SMA. Similarly on the 4-hour chart, you got a low, higher low, higher low. Okay, looks okay there. You can also see the breakout on the RSI, breakout, retest, continuation. So that's a little bit of a bullish indicator there. We'll see. Might actually watch this one tomorrow. If we get a nice little push to the 140 area, maybe it does have a retracement back up to that 144, maybe 145 area in here at the previous high. So NVIDIA maybe showing a little bit of strength. Medium term, however, I still think this is probably a left shoulder head, right shoulder formation. Moving over to Amazon and Google, both of these down a little bit, 0.5% and 1.5% for Google, getting back below the 193.31 level. This is probably culminated. Huge candle yesterday, selling off here today. Back below the level here. Momentum still bullish. RSI still very extended. Probably going to see a higher low setup somewhere in here and then a continuation higher if it's going to do it. But because it's so extended, this could absolutely go pretty substantially lower before you get that higher low setup, maybe 6.5%, 7% lower. So probably done in the short term. It's been a good run, definitely extended. That was about 18.5%. Moving over to staples and discretionary. Staples holding up 0.29, momentum still bearish, RSI still looking okay. It's still in the same trading range that it's been in. Gapped right to the level 82.53 and then fell basically throughout the session, falling a little bit after hours. Still holding basically the same low that it's been in, so maybe it's going to do the bull flag thing. We'll see, but it hasn't broken down quite yet. Yesterday was concerning, but today looks better. And then looking at discretionaries, pretty much engulfed that same candle from yesterday. It was up 1.7% and then down 0.8% here today. Closed almost on the low from yesterday. Momentum stepping down, RSI stepping down. Once this breaks below the SMA, I think it's going to be pretty dramatic. Got up to an 81.5. We talked about just how overbought it is. Definitely extended for sure. Obviously, this has been a massive run, mostly driven by Tesla and Amazon, and both of those are starting to show just a smidgen of weakness. Nothing crazy. If it pulls back, breaks the structure here, you got trend support in the 222 area. Moving over to RIOT and Marathon. Let's do a quick update on these. Haven't talked about them really since the weekend video. You can see big volume here on RIOT. Interesting. Gap up, fell a little bit, holding the level. RIOT looks okay going into tomorrow's session. Something to watch. That volume definitely says this could go higher, especially after yesterday's session. And then Mara breaking the structure here. We talked about it in the morning video. If it held the structure, I would expect to see it push up to this next trend here, the same way that it has been during this kind of last couple of months. Got into the structure here around the start of October, mid-October timeframe. Established the low, start of November. Touched it mid-November, touched it again here mid-December, but now it's broken back down from there, so you would expect to move back into the 1950 area. So RIOT looking much better, Marathon breaking down. Moving over to Breadth. Breadth continues to crater here today. Momentum super bearish. RSI super bearish. Almost oversold there. Open flat. Continued to sell. You can see 50-day continuing to do the same thing. Gap down and fall. Did throw some wicks. Almost back to these lows from the end of October. So market breadth continues to crater. Makes sense. We're seeing the Russell and the Dow sell off, but the SPY and the NASDAQ have held up really well during this down move. And then looking at the 200 here just for a moment, I wanted to highlight how much it's been selling off since that Monday session. You can see the Monday session gapped up through some wicks, and then the next day, Tuesday, was down about 5%. Next day, another 2%, and then we're still at the low from the Wednesday session. So we're almost back to these lows, almost back to that 64.74 level after gapping through the trend line. So 200-day breadth continues to show weakness with this high, lower high, and the low, lower low, lower low. Moving over to the dollar just continues to be absolutely relentless here. So once we hit the trend and broke down, we came back and tested the level 150.50, and that was the relative low. Momentum continued to swing here. We're now back above 106.8. with that break continuation, you should expect another pushback up to the trend here, maybe the level 108. Everything on the dollar says this is looking super bullish. This hasn't been affecting markets here recently. I think that it will eventually. Markets do have to factor in the dollar strength, but for now it hasn't seemed to matter. But the dollar does look bullish again with the break of that level today. Moving over to bonds, JNK and TLT. JNK selling off massive with the sell-off we saw across the non-tech stocks. Volume ramping, momentum bearish. This is showing some risk off here over the next day or two, in my opinion. Probably back down to 96.50, probably lower from there, we'll see. And then looking at TLT, big gap down there as well, 1.2%. We said the 21 was going to be critical. We ended up gapping through it and falling pretty dramatically. Momentum back to bearish. We said the momentum profile said that it should go through there. Now the question is, do we come back to here, double bottom? If we do, that's going to look really, really good. As long as this 89.16 holds, that would also be good, but RSI, volume ramping, I would be a little bit cautious. The hot inflation data today did not help. Probably going to slow the potential for rate cuts next year. I still think we get the December cut, but you can see bonds reacting to that data this morning. Then moving over to the VIX, you can see we did throw a wick to a new relative low, not quite below these previous lows, but we took out yesterday's low and then bounced here a little bit. 9 EMA starting to show a little bit of ramping here. See if we can get above the 21, above the 14 area. As long as tech continues to stay strong, I don't think it'll go, but the rest of markets are definitely showing weakness. Momentum bullish here, RSI bullish on the VIX, so see if this has any follow through in tomorrow's session. Right now for me, this says it should. Moving over to my accounts, you can see it says I made $100, but I don't think that that's actually true. So we're getting that big move from Broadcom earnings. I did look it up. Broadcom had really strong earnings. It's jumping about 11%, and that is pushing the NASDAQ higher in the after hours of about $2. I don't really think that's going to hold up. We'll see tomorrow. Otherwise, in terms of positions, I actually rolled down pretty substantially. So I was nervous going into the end of the session, and I decided to play a little bit cautious, which is probably not helping me out now considering the move that we're seeing in Broadcom, but for now I am being cautious. You can see 4 days from now at 421 for $6 credit. So that puts my max profit at 527. Obviously we're above that now with the Broadcom earnings. Really this is only 2 trading days, right? So you have the Friday session and then the Monday session. So we'll see. I think markets are probably going to go lower, especially once the session opens. Broadcom's not going to be able to hold up the entire markets. There's a lot of different indicators that are showing overextension in the short term. I think we'll see a retest of some of those levels, and then we'll see what happens after that. So if that thesis comes to fruition, then I'm going to need this protection going into tomorrow's session. So really, really small deltas here, playing some defense into tomorrow's session. And then I took off the IWM position as it broke down from those levels and started to sell after hours. It took out my stops, the area that I was going to take off shares. So stick to the plan, took off the shares. We'll see if we find some bullishness tomorrow. Let me know down in the comment section what you thought of the charts today. Where do you think markets are going after today's session? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.